We'll begin with revising Ind AS 102. Before we start revising the Ind AS 102, what is a share-based payment? Anything that is based on your share value or anything that is dependent on which one? Number of shares to be allotted or anything that is to be settled in shares. Okay. Or anything that is based on your share value, that is called as which one? Share-based payment. It includes, for example, allotment of shares to the employees at a concessional rate called as ESOP. The main coverage will be with nothing but which one? Employees stock option plan. Is it only covered? For example, employees are offered shares at a concessional rate, maybe with conditions, without conditions like that. What do you mean by without conditions? Company announces to exercise the options like that. Or company may announce with some conditions to be satisfied. We call it as which one? Vesting conditions. What do you mean by vesting conditions? The conditions to be fulfilled so that the shares will vest with you. Vest with you means you're having what? Right to buy the share in the market. For example, you are 3 years in a company. After 3 years, you're eligible to what? Get the shares. Or if the turnover crosses a particular limit, either first year or second year or third year, they may give it. Or if profit after taxes exceeds a particular limit, you're eligible to get the shares. Or if EPS goes up beyond this limit, or if return on investment goes up beyond this limit like that, vesting condition can be anything. It can be employment condition, it can be a turnover condition, or it can be which one? Return on investment condition, and it can be any condition. Then shares will vest with you. What is the advantage to the employee? The shares will be offered to them at less than the fair market value, less than the fair market value. Simple. The difference between fair market value and which one? Option price. We call it as exercise price. We call it as value of the option. Suppose if it is 300, sorry, if this is 250, 50 rupees will be called as which one? Value of the share option. This can be worked out using intrinsic value, present value, normal value, like that you can work out. Okay. So value of the share is 300. You are giving her 250 means it is how much? 50 is the benefit that goes to the employee. That is called as option cost to the company. Okay. This accounting standard recognizes this option expenses depending upon the vesting period. The vesting period is 3 years. Work out the estimated cost of option. Write off over a period of how many years? 3 years. Or provide over a period of 3 years. Okay. If the option cost is like 5 crore, if the vesting period is like 2 years, recognize the expense over how many years period? 2 years period. While creating the estimate, prudence estimate should be done. After considering number of employees, estimated relief, labor turnover and other factors, you ensure that you are doing a prudent estimate and recognize the expense. That is what we had seen. And this share-based payment also will include payment based on the share price. Payment based on the share price. Sometimes, instead of allotting shares to the employees, the company may give cash based on the share price. The company may give based on which one? Share price. 3 years vesting condition. After that, see the market value, see the option price, difference you can get it in cash. Okay, the option, ESOP can be paid in what? Cash also. Shares can be allotted for purchase of assets. Shares can be allotted for rendering services. Okay, you got the services, you give the shares. Or for purchase of goods. All are covered in this Ind AS. All are covered in this Ind AS 102. Okay, the thing that you have to notice, what is the vesting period? What is the vesting period? Second is what is the vesting condition? And third is the estimated cost of which one? Share based payment or share option or liability. You try to work out. Then recognize using cumulative method. Why cumulative method? Why cumulative method? Because year to year number of employees will change. So estimate first year, the time of first year may be 5 crore. Second year it may be 5.5 crore. Third year it may be 4 crore like that. Okay. Always use cumulative method. Sometimes vesting period may get extended also. For example, if turnover of first year and second year totally 300 crores, option vest in the second year. If it is not satisfied, turnover of first, second, third year, if it crosses 600 crores, option will vest in which year? Third year like that. Sometimes the vesting period itself might change. So it's better to recognize using which method? Cumulative method. See the cumulative expenses minus what is expense recognized in the previous year. Difference will be recognized like that. And sometimes, okay, when options lapse, what to do? There are two options. There are two types of options lapsing. One is called as which one? Unvested options lapse. What do you mean by unvested options lapse? During the vesting period itself, if the options lapse, adjust it and transfer to which one? Retained earnings. General reserve. Sometimes vested options lapse. What do you mean by vested options lapse? You would have created a share-based payment liability based on 1 lakh shares. Okay. After fulfilling the vesting condition, some employees may not exercise the option. Options vest means you are eligible to buy the share, but you are not buying. Unvested options lapse means before the vesting period completes itself, the option lapse. Whatever it is, it will be transferred to which one? Retained earnings. That is called as which one? General reserve. These are the 5 points that you have to remember while passing a journal entry, while creating a provision, all these things. Clear? What is the vesting provision? What is the vesting period? What is the vesting condition? What is the estimated cost? Okay, better to use which method? Cumulative method. If options lapse, what to do? Whatever it is adjusted with which one? General reserve. Because provision created over 3 years, 4th year lapse achna, if you transfer to P&L account, it will overstate the income of that year. So it's better to transfer to which account? Retained earnings account. All these questions I've taken from ICAI material, because from where they can pick question is from your material or from what? ICAI material, like that. Go to the first question. Let your eyes be there with a question, not with a solution. Solutions are given just to save the time of revision. So go through the first question. How many options are granted? No, we are given fair value itself. What is the fair value of the option given? 5 lakhs on 1st April 2010 or 2020 or whatever. If they remain in the company up to 31st March 2023 or 13, okay. So how many years vesting period? 10, 11, 11, 12, 12, 13. Exactly how many years? 3 years. Exercise price of the share option is nil. On 31st March 2021, the company expects only 91% of the employees will remain in employment. On 31st March 2022, the company expects only 89% of the employees to remain in employment. Only 82% of the employee remained on 31st March. Share options were settled at 5,000 shares of how much? 5,000 shares of how much? 100 each and the mark. So we are going to give the share up. They need not pay anything. They need not pay anything. The shareholders need not pay what? Anything for the share option. We are not going to get cash from them. So, but they have given the fair value of the option. What is the fair value? 5 lakhs. This has to be recognized over a period of how many years? 3 years. So, first year, okay, maybe year, cumulative expense, current year expense. First year, what is going to be the expense? First year end level employees continue பண்றான்னு சொல்றாங்க. How many employees we are expecting to continue? 91%. எவ்வளவு recognize பண்ணுவீங்க? 5 lakhs into 91% into 1/3 will be recognized as expense. That is the expense for cumulative period, and that is the expense for current year also. That is the expense for which one? Current year also. Both cumulative expenses and current year expenses are same because it is first year. Second year போகும்போது, what is going to be the expense? Second year, how much estimated? 89%. This will be 89%. The estimate changes to 89%. Cumulatively, you should have recognized 2/3 of expense. 2/3 of expense you should have recognized. Then this will be difference. Then third year, how many employees exercise the option? 82% of the employees fulfill the condition. This into 82% into 3/3 are full. How much should have been the expense? So third year, this much of expense should be recognized. So totally over a period of 3 years, the 5 lakh expenses recognized. Sorry, 4,10,000 of expenses recognized, because 5 lakhs is an estimate, but only 82% is after default. Another 4,10,000 you recognize. No need to copy. I've given the solution. Cumulative expense, current year expense. Totally how much we recognize? 4,10,000. If they ask you journal entry, employee benefit expense accounted out to share-based payment reserve. Share-based payment reserve, because it is going to be given in the form of equity. Employee benefit expense accounted out to share-based payment reserve second year. Employee benefit expenses to share-based payment reserve. Then share-based payment reserve to which account? Better to use which word? Not securities premium, share capital. Because how many shares are given? How many shares are given? How many shares are given? Share options will be settled in 5,000 shares of 100 each. So we are not going to give 5,000 shares into 100 each 5 lakhs. We are going to give only how much? 4,100 shares into 100 each. This is like 4,100 into 100. 4,100 into what? 100. Read the second question. Stock appreciation rate. Earlier, the first part of we settled in shares. We are going to give it in cash. SAR will be settled in cash. Using option price model, estimated fair value of SAR is how much? 95. SAR can be exercised up to 31st March 2023. At the end of 2001, it is expected that 95% of the total employees will exercise the option. 82%, 95% expected at the end of the year. Fair value at the end of each year is given. 112, 109, 114 is given to us. They ask you to pass which one? Journal entry. Read through the question once again, then we'll work out. Whether is there any vesting condition in this question? Is there any vesting condition to be fulfilled? Most important point in the point now. SAR can be exercised any time up to 31st March 2023. Okay. So, first year எவ்வளவு expect பண்றோம்? 95% expect பண்றோம் இல்லையா? First year endல எவ்வளவு expect பண்றோம்? 95% இல்ல. On day 1 எவ்வளவு expect பண்றோம் பாரு. At the start எவ்வளவு இருப்பாங்க? எவ்வளவு employees? 10,000 into at the time what is the value of SAR? 95 into 100% we are expecting. Day 1 la அந்த change கிடையாது. 95 into how much percentage? 100% start level. Then end of year 1. End of year 1, 10,000 into, what is the fair value of the option at the end of the first year? Fair value of the option at the end of the first year, 112. 112. How much percentage they are going to, exercised? 95% will, so 10,64,000. So additional expense at the start. Increase. What is increase? 1,14,000 year and 1 lakh increase. Then end of year 2. End of year 2, how many employees or how many options? 100 and what is the value? 109. 109. How much percentage of employees are expected to exercise the option? 92% expect பண்றாங்க. 109 into 92%. So how much it will be? There is a reversal required. Excess provision will reverse it. End of year 3. End of year 3, எவ்வளவு employees exercise பண்ணாங்க? 89%. What is the fair value? 114. 114 into எவ்வளவு percentage? 89%. Difference will be taken as an expense. Okay, so we are going to pay it in what? We are going to pay it in cash. We are going to pay it in cash. Let us see. At the start 9,50,000, 1,14,000, reversal 61,200. Last year 11,800. At the start we would have provided employee benefit expenses account data to, it is not a share based payment reserve. Why? The amount has to be paid in cash. So share based payment, which one? Liability 95,000. Additional share based payment liability at the end of the first year is how much? 1,14,000. Then second year we reverse. How much we reverse? 61,200. Liability reduces by 61,200, transfer to P&L account. Third year additional provision 11,800 we create. Then employees exercise the option. How much you have to pay? 10,14,600 you have to pay. Share based payment liability account data to cash. இது லாப்ஸ் ஆகிறதுக்கு சான்ஸ் இருக்கா? நம்ம கேஷ் பே பண்றோம் எம்ப்ளாயி, யாரா வேணாம்னு சொல்லுவாங்களே, ஷேர் அலாட் பண்ண வேணா, there's a chance that employee may say we do not want to buy the share. But when you give cash, all will opt for the cash. Share based payment liability account data to which account? Cash account. So the first example was a equity settled transaction. This is a cash settled transaction. That's why earlier we call it as which one? Share based payment reserve. Now it is called as share based payment liability. Every year you create. Second year alone there is a reversal. Third year additional provision created. Share based payment liability account data to cash. Why are we not applying 1/3, 2/3, 3/3? SAR can be exercised any time. First year when the employees கேட்டானா you should have paid how much? For example, first April ஒரு employee கேட்டிருந்தானா 9,50,000 pay பண்ணிருப்பீங்க. Okay, end of the first year வந்து கேட்டிருந்தானா 10,64,000 you would have paid what? Cash. It is not 1/3, 2/3, 3/3. It is the provision to be created at the start itself. Done. Read the next question. The options to keep managerial persons, either cash equivalent to 10,000 shares or get 15,500 shares. Okay. உங்களுக்கு இதுல வந்து பார்த்தா cash option கொடுத்திருக்காங்க, share option கொடுத்திருக்காங்க. Option 1, you get cash equal to how much? 1,000 shares. Option 2 என்ன கொடுத்திருக்காங்க? Get 1,500 shares னு கொடுத்திருக்காங்க. Minimum service requirement is how much? 2 years, and shares taken must be kept for how many years? If we buy the share, it must be kept for 3 years. Share alternative oda fair value la kuduthirka 102. Why? Because there is a restriction. What is the restriction? You cannot transfer the shares for how many years? 3 years. Normal fair value, the restriction illada fair value 113. Fair value at the end of the first year is given. Fair value at the end of which year? Second year is given. Employees exercise which option? Cash option at the end of 2022 nu kudutham. 2021 December, 2022 December le they opted for what? Cash. This you will come to know only at the end of 2022. When you create provisions, okay, you have to think on both. Now how to create provision? Think part. What is the normal fair value? 113. இதே ஷேர் ஆப் பண்ணனா இதோட வேல்யூ எவ்வளவு இருக்கும்? 102 தான் இருக்கும். Okay. Cash you will get equivalent to how many shares? Cash equivalent to how many shares you will get? 1000 shares you will get. But if you want to get shares, you will get how many shares? 1500 shares உங்களுக்கு என்ன பண்றது? We have to see both. We have to see what? Both. Okay. At the start, what is the fair value of equity option? Equity option பாருங்க எவ்வளவு கொடுத்திருக்கான் பாருங்க. Just go through. Equity alternative போனோம்னா என்ன வந்துரும்? Equity alternative போனோம்னா என்ன வந்துரும்? எவ்வளவு ஆப்ஷன்ஸ்? எவ்வளவு தந்த போறோம்? $1,500 into 102. எவ்வளவு இருக்கும்? 1500 into 102 எவ்வளவு வரும்? 1,53,000 வரும். 1,53,000 வரும். இதே நீங்க கேஷ் அவுட் பண்றீங்கன்னா 1000 shares only you will get at normal fair market value. What is the normal fair market value? 113 you will get. எவ்வளவு இருக்கும்? 1000 into 113. So இது வந்து share based payment liability. பட் நம்மளுக்கு தெரியாது அவன் ஈக்விட்டி ஆப்ட் பண்ணோம்னா கேஷ் ஆல்டர்னேட்டிவ் ஆப்ட் பண்ணோம்னு தெரியாது இல்லையா? அப்போ so we'll create a share based payment liability for 1,13,000. Balance வந்து we'll call it a share based payment. Total balance 40,000. You will call it as which one? Share based payment reserve. Take up this. More than taking up the solution from printed one, I request you to take up this. cash option na 1000 into what is the fair value of the share? 120 into 1 by 2. You know, why 1 by 2? 2 years. The period of employment required is 2 years. End of year 2 வந்து பாத்தீங்கன்னா 1000 into எவ்வளவு ரூபாய் 1000 into what is year end 2 ஓட normal fair value 130 into 2 by 2 would have been recognized na எவ்வளவு வரும் expenses for P&L account will be expense for P&L account will be 1,32,000 minus 60,000 72,000. Equity option, the fair value does not change. Equity option fair value does not change. Okay, 40,000 into 1 by 2. What is the journal entry you will pass? First year 80,000 to share based payment liability for the cash option 60,000 to share based payment reserve for the equity component share based payment reserve 20,000 will be there. The second year la pass பண்ணீங்கன்னா 92,000 cash option order value share based payment reserve. So finally, are we going to give cash or shares? Employees opted which option? Cash option now. Just pay the cash. The 60 plus 72 is nothing but this 1,32,000. Sir, what about share based payment reserve that is created? There is no use. So what will you do? How much we created? 40,000 to which account? General reserve, retained earnings, anything is okay. Suppose if they would have opted, question let me change பண்ணனும்னு வெச்சுக்கோங்க, if they would have opted equity option, if they would have opted equity shares, அப்ப என்ன பண்ணிருப்பீங்க? ஈக்விட்டி ஆப்ட் பண்ணிருந்தானே என்ன பண்ணிருப்பீங்க? நீங்க என்ட்ரி பாஸ் பண்ணுங்க. இது கேஷ் வாங்கிட்டாங்க, அதனால ஷேர் பேஸ்ட் பேமெண்ட் லைபிலிட்டி அக்கௌண்டட் டு கேஷ், இதை வந்து ஜெனரல் ரிசர்வுக்கு ட்ரான்ஸ்ஃபர் பண்ணிட்டோம். if they would have opted equity, எவ்வளவு equity shares தரணும்? How many equity shares we need to give? 2 equity share capital. எவ்வளவு shares? 1500 shares into 100 rupees. 1500 shares into 100 rupees. எவ்வளவு வரும்? 1,50,000 to securities premium. And the difference between 102 and 100, face value 100 and 102 na, the 1500 into 2 1500 into 2 தானே எவ்வளவு இருக்கும்? 3000 இருக்கும். இதை டெபிட் பண்ணுவீங்க. ஷேர் பேஸ்ட் பேமெண்ட் ரிசர்வ் அக்கௌண்ட் டேட்டா எவ்வளவு கிரியேட் பண்ணிருக்கோம்? 40,000. ஷேர் பேஸ்ட் பேமெண்ட் லைபிலிட்டி இதில் தான் க்ளோஸ் பண்ணுவோம். எவ்வளோ அமௌண்ட் இருக்கு? ஷேர் பேஸ்ட் பேமெண்ட் லைபிலிட்டி டோட்டலாக எவ்வளோ கிரியேட் பண்ணியிருக்கோம்? 1 lakh. But required is only 1,53,000 தானே இங்கே required. Only 1,53,000 தானே இங்கே required. நான் கொடுத்துருக்கோம். ஷேர் ஆல்டர்னேட்டிவ் ஃபேர் வேல்யூ வித் ரெஸ்ட்ரிக்ஷன்ஸ் 1 or 2 தான், அது சேஞ்ச் ஆகலை. இயர் டு இயர் ஃபேர் வேல்யூ சேஞ்ச் ஆகலை. வித் ரெஸ்ட்ரிக்ஷன்ஸ் வாட் இஸ் அ ஃபேர் வேல்யூ? 1 or 2 தான், அது சேஞ்ச் ஆகலை. இப்போ பேலன்சிங் ஃபார் எவ்வளோ இருக்கும்? 153 minus 40, 1 lakh. Some more balance will be there. We created 1,32,000. But liability is only 1,13,000. Now balance என்ன பண்ணுவீங்க? General risk. Balance. What is the balance available? 132 minus 113. எவ்வளவு balance available? To which account? It cannot be recorded at 132. It cannot be recorded at 132. Because with restrictions, what is the fair value? With restrictions, what is the fair value? 102. Any doubt in it? See, if you purchase assets or if you purchase goods, the fair value of the goods purchased or fair value of the asset purchased will be taken as what? The fair value of the transaction. Read the next one, you will understand. போறீங்களா அது? Live online friends, complete பண்ணிட்டீங்களா? For the cash option, we create which one? Share-based payment liability. For the share option, equity option, share-based payment reserve we create. Here we take 1500 into 2. Why 1500 into 2? Because with restrictions, what is the fair value? 1 or 2. They have not given fair value at the end of first year, second year. Because the shares taken must be kept for how many years? 3 years now. That fair value of the share will not be equal to the normal fair value. Okay, if you buy the goods or purchase assets, what is the fair value of the transaction? Whatever is the fair value of the goods purchased will be taken as what? Fair value of the transaction. Go through this. Share-based payment, purchase of goods. In Indian Incorporated issued 995 shares for purchase of office building. Okay, the title was transferred in the name of the Indian company in February 2021. Shares were issued. Fair value of the office building எவ்வளோ அதான் debit பண்ணுவோம். Asset account data, the fair value. 2. Share capital will be 995 into the face value of the shares. What is the face value of shares? 100 na 99,500. Balance will go to which account? Securities premium. It is like purchase of assets and allotment of which one? Shares on the market. Even the shares can be allotted for which one? Services. Fair value of the services will be taken as what? Fair value of the shares given. Look at the next question. Reliance Limited hired a maintenance company for oil fields. The services will be settled by issuing how many shares? 1000 shares of Reliance. The period for which services should be provided from 1st April to July. எவ்வளோ months? April, May, June. July 1st la முடியுது. So July could not be considered. எவ்வளோ months? 3 months. Fair value of the services estimated as how much? 1 lakh கொடுத்திருக்காங்க. Face value of share is 10 கொடுத்திருக்காங்க. So fair value of the services will be taken as the fair value of the transaction. 1 lakh divided by எவ்வளோ months? 3 months. Monthly you will pass journal entry. So 33,333.33 and the mari. Repairs and maintenance account data to share-based payment reserve. Why? Because we are going to give what? Equity shares. Repairs and maintenance account data to share-based payment reserve. Again 30th June, repairs and maintenance account data to share-based payment reserve. Share-based payment reserve total level create பண்ணிருக்கீங்க 1 lakh nothing but fair value of the services. How many equity shares are given? How many equity shares are given? 1000 equity shares of 10 each now. Face value is 10,000. Face value is how much? 10,000. Balance will go to which account? Securities premium. It's a simple example. Read the next question. Tata Industries issued a share-based payment option, one of the key managerial personnel, which can be exercised either in cash or in which one? Equity, which has the following features. Number of cash settled shares is how much? 74,000. Service condition 3 years. Number of equity shares settled at a face value of இதே ஈக்விட்டினா 90,000 ஷேர்ஸ் கிடைக்கும். கேஷில் வாங்கிட்டீங்கன்னா 74,000 கேஷ் ஈக்குவலன்ட் கிடைக்கும். ஆப்ஷன் 2க்கு என்ன கண்டிஷன்? நீங்கள் சர்வீஸில் 3 இயர்ஸ் இருக்கணும். அதுக்கப்புறமா 2 இயர்ஸ்க்கு அந்த ஷேரை ட்ரான்ஸ்ஃபர் பண்ணக்கூடாது. அந்த மாதிரி ஃபேர் வேல்யூ வித் ரெஸ்ட்ரிக்ஷன்ஸ் எவ்வளோ கொடுத்துருக்காங்க? 115. ஃபேர் வேல்யூ த கிராண்ட் டேட் கொடுத்துருக்காங்க. ஃபேர் வேல்யூ ஃபார் த ஃபர்ஸ்ட் இயர், செகண்ட் இயர், தேர்ட் இயர் இஸ் given to us. பாஸ் ஜர்னல் என்ட்ரி கேட்டிருக்கான். வித்தவுட் லுக்கிங் அட் த சொல்யூஷன் ட்ரை டு ஒர்க் அவுட். ட்ரை பண்ணுங்க. Which question you are going to try now? அந்த illustration 6 இருக்கு இல்லையா, அதை ட்ரை பண்ண போறீங்க. If you have not talked up, please take it. Try question number 6. இது முடிச்சிட்டீங்களே? At the start, okay, cash settle level over 74,000 into 74,000 into 135. இது ஈக்விட்டினா 90,000 into so share based payment liability This 3,60,000 you will recognize as expense over a period of how many years? 3 years. Share-based payment liability, cash option. Cumulative amount solo first year like 138 or 74,000 into 138 into 1 by 3. This is the current year expense also. Second year both 74,000 into 140 into 2 by 3. So second year expense will be third year 74,000 into 147. This current year expense will be equity will recognize each year. Journal entry ரொம்ப simple. First year entry pass பண்ணுங்க. Employee benefit expense account to share-based payment liability to share-based payment reserve. Second year repeat, third year repeat, only the amount will be different. Cash option exercise பண்ணாங்கன்னா you will transfer whatever is the share-based payment liability in the amount pay பண்ண எவ்வளோ pay பண்ணுவீங்க 1 crore 87 lakh 8,000 இல்லை 1 crore 8 lakh 78,000 share-based payment liability account to cash. The share-based payment reserve வந்து என்ன பண்ணுவீங்க you will transfer to general reserve. இது equity opt பண்ணனா last time பண்ண மாதிரி. And Ind AS also suggests wait பண்ணுங்க instead of transferring to general reserve you can transfer to securities premium account also. This can be transferred to which account? Securities premium account also. Alternative they suggest. You would have done that. Liability pay பண்ணாங்கன்னா 1 crore 8 lakh 78,000. To cash, this will be transferred to which account? Retained earnings and the mari. And the 3,60,000 excess இருக்கும். That can be adjusted with which one? Securities premium also. That is an alternative answer. முன்னாடி பார்த்த பாடத்துல just we have done for 2 years. This is for how many years? 3 years. The calculations. Keep it in mind. Vesting period, vesting condition, and estimated cost எவ்வளோ cumulative method use பண்ணி recognize பண்ணுங்க. Lapse ஆச்சுனா you can transfer to which account? Retained earnings. இந்த 3,60,000 இருக்கு இல்லைங்களா, that is for 3 years. So 120, 120, 120. Done? Or other. If you have completed this, please go to the next question. Ankita holding இருக்கும். How many options? 100 shares to how many employees? 500 employees இருக்கும். I request you to go through the full question. I request you to go through the full question. We will solve it. அங்க vesting condition change ஆயிட்டே இருக்கும். The Ankita holding, I request you to read. Which question? This question. I request you to read full question, then we will solve. If you have not taken up, please take it. Whatever we are doing is a supplementary to the regular class work. Regular class workல இதெல்லாம் கவர் பண்ணிருக்க மாட்டோம். ஸோ அதோட சப்ளிமெண்ட் தான். ரெகுலர் கிளாஸ்ல இலாபரேட்டா Ind AS 102 பண்ணியிருக்கோம். அதை ஃபுல்லா கோ த்ரூ பண்ணுங்க. திஸ் இஸ் an add on. The solution would have been in different style, but let us work out in our method. Try பண்ணுங்க. Ankita Holding Incorporated எவ்வளவு ஷேர்ஸ் கொடுத்திருக்காங்க? 1000 shares to how many employees? 500 employees and 1st January கொடுத்திருக்காங்க. The employees should remain in service during the vesting period. Share shall vest at the end of the first year if the company's earnings increased by first year possible when the company's earnings increases by எவ்வளவு percentage? But earnings increased by only 10% கொடுத்திருக்காங்க. 29 employees left. Okay. Second year, if the company's earnings increase by more than 20% over how many years period? 2 years period. But in the trend 10% continue ஆச்சுன்னா 10 plus 10 20% வந்துடும். But second year actual position is only 18%. Third year the company increases more than what? 22% கொடுத்திருக்காங்க. Third year எவ்வளவு increase? எவ்வளவு percentage? Assume that the company's earnings increase at the desired level and the performance target has been what? Met na third year la meet பண்ணிருக்காங்கன்னு அர்த்தம். அப்போ first year ல இருக்கும்போது what will be the vesting period? 2 years. 2 years vesting period. Second year இருக்கும்போது 3 years vesting period. 3 years vesting period. Okay. So we have to provide for number of employees left, etc. Okay. Start. At the end of first year, எவ்வளவு எம்ப்ளாயிஸ் இருக்காங்க? எவ்வளவு எம்ப்ளாயிஸ் இருக்காங்க பாருங்க. இனிஷியலி எவ்வளவு எம்ப்ளாயிஸ் இருந்தாங்க? 500 எம்ப்ளாயிஸ் இருந்தாங்க. How many employees left already in the first year? 29 employees left. How many more employees are expected to leave at the end of the first year? 31 more employees expected to leave. Now, எவ்வளவு எம்ப்ளாயிஸ் இருப்பாங்க? 440 employees. Into எவ்வளவு options? Into all options, 100 options, into what is the fair value of the option? 122 கொடுத்திருக்கா, into 1 by 2, into 1 by 2. 26 lakhs 84,000. This is the cumulative expense. And that is the current year expense also. Second year வரும்போது second yearல பாருங்க. $500 minus 29 minus second year எவ்வளவு பேர் வெளிய போயிருக்காங்க? 29. Expected to leave 20. எவ்வளவு employees இருப்பாங்க? 419 into 2 by 3 will be the cumulative expense. எவ்வளவு வரும்? 34 lakh 867. The current year expense will be third year. How many employees actually left? 29, third year like? 21 எவ்வளவு employees இருப்பாங்க? 421 into 3 by 3. 51 lakh. Is it equity settled or cash settled? Equity settled. So what is the entry you will pass? First year, second year, third year, this expense. Then, when the options are exercised, what is the entry you will pass? Bank அவன் pay பண்ணாரு என்ன? Are they paying any money for this? Are they paying any money for this? No. So what is the entry you will pass? Whether lapse ஆயிருக்கா? No. How many shares are given? 421 into 100 shares into 100 rupees face value. We assume that 100 rupees face value. Balance will go to take up this.
We have created that is for 421 employees. But previously,
because this 23 is an estimate. This 23 is an estimate. Estimate can be less and actual can be more. That's adjust panning. Because estimate cannot be accurate. And the 23 is the estimated employees. அந்த வருஷத்துல அவன் எஸ்டிமேட் பண்ணது 23 எம்ப்ளாயிஸ் வெளில போவாங்கன்னு எதிர்பார்த்தோம்.
additional reserve create பண்ணது
தேவையில்லை. Because at the end of the second year, what is your position? 500 minus 29 already know. This 23 we are estimating to go. This actual position will be known only after 12 months. Second year இருக்கும்போது என்ன பொறுத்த வரைக்கும் 23 people வெளியே போக எதிர்பார்ப்பாங்க. Estimate.
They say, but should we give any disclosure?
No, not required. Because labor turnover year to year change ஆயிட்டே இருக்கும் இல்லையா? பார்த்தா second and third year put together 31 தான் வெளில போகணும்னு எதிர்பார்க்கும். But second yearலயே 29 வெளில போயிட்டாங்க, further 23 வெளில போறாங்க. So estimate need not be equal to actual. Because of that some variations can come. Two implies considering the materiality of the amount involved in. Next question is a fantastic question. Go through that, you will understand why it is fantastic. Next question பாருங்க என்ன கொடுத்திருக்காங்க. திருப்பி சொல்யூஷனை பார்க்காதீங்க. I request you to go through only the question. என்னை பொறுத்த வரைக்கும் இந்த போட்டோ போட்டு சிஎம்ஏ எக்ஸாம்ஸில் இந்த மாதிரி தான் எதிர்பார்க்கான வேறு வழி இல்லை. You will do all these. Go to that ACC limited question. Formula. Are you going to the question? Shall we? ACC Limited granted 10,000 share option to the managers. In order to get the option, the manager has to work for how many years? Next 3 years. To reduce the cost of production by 10% over next how many years? 3 years. Year 1 la achieve பண்ணிட்டாங்க. Year 2 la
achieve பண்ணலாம்.
8% தான். Not expected to vest in the future when you are in second year னு கொடுத்திருக்கான். அப்போ வெயிட் பண்ணுங்க. When you are in first year, what is the thing achieved? How many options? 10,000 options into what is the fair value? 90 into 1/3 expense recognize பண்ணிருப்போம். 3 years period vesting condition. Second year la not expected to vest னு சொல்லிட்டோம். Which means reverse that 31,667. Whatever is the provision created has to be reversed. But third year la vest ஆகுது. என்ன பண்றது? Third year la vest ஆகுது. Achieved 10% achieved. So 12, 10, 8 average பார்த்தா 10% இருக்குல்லையே achieved னு சொல்றான். So வேற வழி இல்லை. 10,000 into cumulative 95 into 3/3. எவ்வளோ எக்ஸ்பென்ஸ்? நான் ஃபர்ஸ்ட் இயர்ல கிரியேட் பண்ணது செகண்ட் இயர்ல ரிவர்ஸ் பண்ணி க்ளோஸ் பண்ணியிருப்போம். தேர்ட் இயர்ல 9,50,000 வர வழி இல்லை, ஃபுல்லாக ரெகனைஸ் பண்ணோம். சார் 3 years ரெகனைஸ் ஆகல. இட்ஸ் ஒன்லி an estimate. It's only an estimate. It can happen. Now see the solution. First year 10,000 into 95 into 1/3. This much expense will be recognized. Second year this whatever is recognized will be reversed. Third year 9,50,000 we have to create. Okay. Next question. It's a simple question only. You can go through. An entity issued 100 shares to the 1,000 employees subject to service condition of how much? Next 2 years. On the grant date, what is the fair value? 195. 95% of the employee will remain service at the end of first year. கொடுத்திருக்காங்க. அதான் கொடுத்திருப்பாங்க. 1,000 100 into 1,000 into 195 into எவ்வளோ percentage? 97% into half expense for the first year. Then, however, at the end of the second year, 91% தான் டோட்டலாக இருக்காங்க. So 1,000 into 100 into 195 into 91% into 2/2 will be how much? 94,57,500. In that, எவ்வளோ வருதுங்க? தப்பா இருக்குன்னு நினைக்கிறேன் calculations. First year calculation சொல்லுங்க. 100 into 1000 into எவ்வளவு implies? 100 into 1000 into 195 into எவ்வளவு percentage? 97% into half expense should be recognized. Okay. Second year எவ்வளவு percentage continue பண்றாங்க? 91% into 2 by 2 போட்டா for current year expense okay, this minus ஆகுது. This minus the actual this calculation minus 94,57,500 is 82,87,500. The calculation minus 94,57,500 is what? 82,87,500. Next question. An entity issued 50 shares. How many employees? Next 2 years கொடுத்திருக்காங்க. Settlement to be made in cash. Grant date fair value is 85. Over the fair value the end of the first year and second year is what? 80 and 90 கொடுத்திருக்காங்க. First year 50 into 170 into end of the first year fair value 80 into 1 by 2 3,40,000. Second year 50 into 170 into 90 into 2 by 2. This minus 3,40,000 is how much? 4,25,000. That's it. This is your model test paper of December 2024. At the beginning of year 1, an entity grants to senior executives how many options? They will remain in employment for how many years? 3 years. Share options cannot be exercised unless share price has increased from 50 to above how much? 65 கொடுத்திருக்கான். The share price is above 65. Share option can be exercised anytime till what? 10th year கொடுத்திருக்கான். The entity applies binomial option pricing model which takes into account possibility that share price will exceed 65. Therefore, share option becomes what? Exercisable கொடுத்திருக்காங்க. The possibility of share price will not exceed 65 and hence option will be forfeited கொடுத்திருக்காங்க. ரெண்டு calculate பண்ணிட்டு estimated fair value the options with the market condition is how much? 24 per option கொடுத்திருக்காங்க. Calculate remuneration to be recognized every year. ரொம்ப simple. How many options? 10,000 options. Into what is the fair value? 24. 1/3, 1/3, 1/3. Calculate expense to be recognized each year கொடுத்திருக்காங்க. இதில் எது important? 10,000 into what is the fair value of the option? அதாவது இது எதுக்கு இந்த ரெண்டையும் கொடுத்திருக்காங்க? அதாவது I consider both the thing. Okay. Possibility that the share price will be more than 65. Possibility that the share price will be what? Less than 65. ரெண்டையும் consider பண்ணிட்டு நான் அந்த fair value work out பண்றேன் அப்படின்னு சொல்லியிருக்கேன். Okay. I consider both probabilities. Then I estimate based on that the fair value of the option is how much? 24 னு சொல்லியிருக்கேன். Answer is 10,000 into 24 into 1 by 3. Answer பார்த்தலாம். தான் போட்டிருப்பாங்க. 10,000 into 24 into 1 by 3, 80,000. Second year also 10,000 into 24 into 1 by 3, 80,000. Third year 10,000 into 24 into 1 by 3, 80,000. Each year how much will be recognized? 80,000, 80,000, 80,000 recognize பண்ணும். Actually இந்த மாதிரி மாடல் டெஸ்ட் பேப்பர்லாம் பார்த்துட்டு போய் எக்ஸாம் ஹாலுக்கு வந்தோம்னா ஏதோ இந்த கான் ஏர் படம் பார்த்துட்டு ஃப்ளைட் ஓட்டுற மாதிரி இருக்கும். Leave it. எதிர்பார்க்காதீங்க, ஆசையை தூண்டுறாங்க வேற ஒன்றும் இல்லை. பார்க்கலாம், அதுவும் பார்க்கலாம். டேரக்டா ஆன்சரே போயிடலாம். So regular class work plus this, regular class la FR material cover ஆயிருக்கும் plus this work is more than sufficient for what? Ind AS 102.